Real estate is one of the most powerful wealth-building tools, but these mistakes could lead to massive losses. Imagine buying your dream property only to discover hidden repair costs that drain your savings, or taking on too much debt, leaving you financially strained. These pitfalls can turn your investment into a nightmare. Let's dive into the most dangerous real estate mistakes beginners make and how you can avoid them. Let's go over the biggest real estate mistakes and how you can avoid them as a beginner. Whether you're buying your first home or investing in rental properties, knowing these common errors can save you time, money, and stress. Real estate can be a goldmine, but only if you approach it with the right knowledge and strategy. Stick around to learn how to navigate these challenges like a pro. One of the most common mistakes beginners make is underestimating repair or renovation costs. It's easy to fall in love with a property and overlook the cracks in the walls or the outdated kitchen. But what seems like a minor fix can quickly turn into a money pit. For example, replacing a roof or fixing foundation issues can cost thousands of dollars. Always get a detailed estimate from a contractor before making an offer. This way, you'll know exactly what you're getting into and can budget accordingly. Another critical error is over-leveraging with loans. It's tempting to take out the maximum loan amount to buy the biggest property you can afford. However, this can leave you vulnerable if the market shifts or if unexpected expenses arise. High monthly payments can strain your finances, especially if you're relying on rental income to cover them. A safer approach is to borrow conservatively and ensure you have a financial cushion for emergencies. This will give you peace of mind and protect your investment. Skipping property inspections is a mistake that can cost you dearly. Some beginners try to save money by forgoing a professional inspection, but this is a risky move. Inspections can reveal hidden issues like mold, plumbing problems, or structural damage that aren't visible to the untrained eye. These issues can be expensive to fix and may even make the property unsafe to live in. Always hire a qualified inspector to thoroughly evaluate the property before you buy. Ignoring local market trends is another pitfall that beginners often fall into. Real estate is highly location-specific, and what works in one area may not work in another. For instance, buying a property in a declining neighborhood can lead to losses, even if the property itself is in good condition. On the other hand, investing in an up-and-coming area can yield significant returns. Research the local market, including property values, rental demand, and future development plans, to make an informed decision. Neglecting property management is a mistake that can turn your investment into a headache. Managing a property involves more than just collecting rent. You'll need to handle maintenance, tenant issues, and legal compliance, among other things. If you're not prepared to take on these responsibilities, consider hiring a professional property manager. While this will eat into your profits, it can save you time and stress in the long run. Good management is key to maintaining the value of your investment. Another mistake beginners make is failing to plan for vacancies. If you're buying a rental property, it's unrealistic to expect it to be occupied 100% of the time. There will be periods when the property is empty, and you'll still need to cover the mortgage and other expenses. To avoid financial strain, set aside a reserve fund to cover at least 6 months of vacancy. This will give you a buffer to find new tenants without worrying about your cash flow. Overpaying for a property is a common error that can eat into your profits. Beginners often get caught up in the excitement of buying and end up paying more than the property is worth. To avoid this, research comparable properties in the area and get a professional appraisal. This will give you a realistic idea of the property's value and help you negotiate a fair price. Remember, the goal is to buy low and sell high, not the other way around. Not having a clear exit strategy is another mistake that can leave you stuck with a property you don't want. Whether you're flipping houses or renting them out, it's important to know how and when you'll sell the property. Market conditions can change, and you may need to adjust your strategy accordingly. Having a plan in place will help you make informed decisions and maximize your returns. Always think long-term and be prepared for different scenarios. Failing to understand the tax implications of real estate investing is a costly mistake. Real estate transactions can have significant tax consequences, including capital gains tax, property tax, and depreciation recapture. It's important to consult with a tax professional to understand how these will affect your bottom line. Proper tax planning can save you thousands of dollars and help you keep more of your profits. Don't overlook this critical aspect of real estate investing. Another common error is not diversifying your real estate portfolio. Putting all your money into one property or one type of property can be risky. If the market takes a downturn, you could lose a significant portion of your investment. Diversifying across different types of properties and locations can help spread the risk and protect your portfolio. Consider investing in a mix of residential, commercial, and rental properties to balance your exposure. Finally, many beginners fail to educate themselves before diving into real estate. Real estate is a complex field with its own set of rules and strategies. Without proper knowledge, you're more likely to make costly mistakes. Take the time to learn about the market, financing options, and investment strategies. Attend seminars, read books, and consult with experienced investors. The more you know, the better equipped you'll be to make smart decisions and avoid common pitfalls. Real estate can be a lucrative investment, but it's not without its challenges. By avoiding these common mistakes, you can increase your chances of success and build wealth over time. Remember, the key is to approach real estate with a clear plan, thorough research, and a willingness to learn. If you're ready to take your real estate game to the next level, hit subscribe and check out the free investment guide below. Happy investing. Want more real estate advice? Hit subscribe and check out the free investment guide below.